Imagine this. You wake up every month and see cash flowing into your account without lifting a finger. That's the beauty of dividend ETFs. Not only do they give you a steady stream of passive income, but they also provide diversification and long-term growth. Today, I'm giving you the inside scoop on the top 10 dividend ETFs for September 2024 based on technical analysis and data from reputable institutions. By the end of this video, you'll know which ETFs can power up your portfolio with consistent returns and growth. In 2024, the market has seen ups and downs, but dividend investors continue to thrive thanks to the reliability of these funds. So in today's video, we'll cover the top 10 dividend ETFs for September 2024. You'll learn why these ETFs made the cut, how they've performed based on key technical analysis, and what you can expect from them moving forward. Let's get started. 1. JPMorgan Equity Premium Income ETF. Coming in at number 1, we've got JPMorgan's Equity Premium Income ETF. This ETF has been a popular choice among income-focused investors. Why? Because JEPI focuses on providing a high yield while also reducing volatility using an options overlay strategy. This fund generates a consistent monthly income, which is music to every dividend investor's ears. Now looking at the technicals, JEPI has a strong relative strength index, RSI, sitting at around 55, indicating that the ETF isn't overbought or oversold. Its moving average convergence divergence, SCHD, also shows positive momentum with a steady increase in price over the past few months. What makes JEPI stand out is its 30-day SEC yield of around 9%. This makes it a top choice for those seeking monthly income with reduced market risk. 2. Schwab US Dividend Equity ETF. Next up is SCHD, Schwab's US Dividend Equity ETF. If you're looking for a solid core holding in your portfolio, SCHD is a great choice. It tracks the Dow Jones US Dividend 100 Index, which focuses on high-quality companies with strong dividend growth. From a technical perspective, SCHD has been riding above its 200-day moving average, which is a bullish sign. Its price-to-earnings ratio sits at a reasonable level of around 14, according to Schwab, making it attractive for value investors. Plus, its dividend yield of 3.6% is quite appealing, especially given the quality of the companies in its portfolio. SCHD has also shown resilience during market downturns, making it a great choice for long-term investors. 3. Vanguard High Dividend Yield ETF. At number 3, we have VYM, the Vanguard High Dividend Yield ETF. VYM is all about targeting companies that pay above average dividends without sacrificing quality. This ETF holds some of the biggest names in the US stock market, like Johnson & Johnson and Procter & Gamble. Technically speaking, VYM's RSI is hovering around 60, signaling moderate strength in the fund's current price action. Its MACD has crossed above the signal line, indicating bullish momentum going into September 2024. According to Vanguard, VYM's dividend yield is about 3.2%, making it a reliable choice for income-seeking investors who also want exposure to large cap stocks. 4. iShares Select Dividend ETF. Coming in at number 4 is DVY, the iShares Select Dividend ETF. This ETF focuses on companies that have consistently paid dividends over time and currently boasts a dividend yield of 3.8%, according to iShares. DVY's technicals are strong, with the ETF trading above both its 50-day and 200-day moving averages, indicating a bullish trend. Its RSI is sitting comfortably at 58, and the MACD shows upward momentum over the past month, making it a solid pick for September 2024. iShares also notes that DVY's portfolio is filled with stable blue-chip companies which are known for their dividend reliability. 5. iShares Core High Dividend ETF. Number 5 on our list is HDV, the iShares Core High Dividend ETF. This fund tracks an index of US companies that consistently pay high dividends and focuses on sectors like healthcare, energy, and utilities, which are known for being defensive during economic downturns. Technically, HDV has been showing strength with its RSI at 62, indicating it's gaining positive momentum. Its MACD also supports this trend as it crossed above the signal line in late August, signaling bullish momentum. HDV's dividend yield is currently around 3.7%, making it a solid choice for those seeking consistent income with less volatility. 6. ProShares S&P 500 Dividend Aristocrats ETF. Number 6 is for the Dividend Aristocrat fans out there. NOBL is the ProShares S&P 500 Dividend Aristocrats ETF. This ETF focuses on companies that have raised their dividends for at least 25 consecutive years. We're talking about some of the most stable companies on the planet. NOBL's technical analysis shows a solid performance. It's trading above its 200-day moving average, which is typically a bullish sign. The RSI is around 57, indicating that it's gaining strength without being overbought. ProShares reports that NOBL's dividend yield is 2.5%, which might seem lower than others, but it's backed by rock-solid companies that have proven themselves over decades. 7. Invesco S&P 500 High Dividend Low Volatility ETF. Next, we have SPHD, the Invesco S&P 500 High Dividend Low Volatility ETF. As the name suggests, this ETF focuses on high dividend-paying stocks with lower volatility, making it an ideal choice for conservative investors. SPHD's technical indicators are looking strong, with the ETF trading just above its 50-day moving average, indicating short-term bullishness. Its RSI is sitting at 61, suggesting that there's still room for upward movement without hitting overbought territory. SPHD's current dividend yield is around 4.2%, making it a great pick for September if you're looking for high income with reduced risk. 8. Vanguard Dividend Appreciation ETF. Number 8 is VIG, the Vanguard Dividend Appreciation ETF. This ETF focuses on companies that have a history of growing their dividends consistently over time, making it an excellent choice for investors looking for dividend growth rather than just high yields. VIG's technicals are solid, with the ETF holding above its 200-day moving average and an RSI of 54, suggesting moderate strength. VIG's MACD is showing positive momentum, and its dividend yield sits around 2%, making it a reliable choice for those looking to grow their income over time, rather than chasing high yields. 9. Spider S&P Dividend ETF. At number 9, we've got SDY, the Spider S&P Dividend ETF. SDY tracks the S&P High Yield Dividend Aristocrats Index, which means it's focused on companies that have consistently increased their dividends. From a technical standpoint, SDY is in a bullish pattern with its RSI at 59, and the ETF trading above its 50-day and 200-day moving averages. SDY's dividend yield is 3.1%, making it a solid middle ground for both income and growth. 10. iShares International Select Dividend ETF. Last but not least is IDV, the iShares International Select Dividend ETF. If you're looking to diversify outside of the US, this is a fantastic option. IDV focuses on high dividend-paying companies from developed markets around the world. IDV's technicals show strength going into September, with an RSI of 60 and bullish MACD signals. Its yield is currently around 5%, making it one of the higher-yielding ETFs on this list. Plus, the international exposure helps you spread out risk beyond US markets. Bonus, Global S&P 500 Covered Call ETF. As a bonus ETF for those of you sticking around, let's talk about XYLD, Global S&P 500 Covered Call ETF. This ETF has been gaining a lot of attention due to its unique strategy of generating income through covered call writing on the S&P 500. It's a great way to enhance your dividend income if you're comfortable with a bit more risk. XYLD is designed for income-focused investors looking for consistent monthly distributions. According to Global X, it boasts a current yield of about 9%, making it a serious contender for those seeking high dividend payouts. But what about the technicals? XYLD's RSI is sitting at 56, meaning it's not overbought or oversold, right in the sweet spot for continued price growth. Plus, its MACD is showing upward momentum, indicating that we could see continued strength in this ETF going forward. One thing to note is that covered call strategies tend to cap potential upside in exchange for generating high income, so keep that in mind when considering XYLD. It's a great addition for those looking for monthly income, but it may not offer the same long-term growth potential as other dividend ETFs like SCHD or VIG. There you have it, the top 10 dividend ETFs for September 2024. Whether you're looking for high yields, low volatility, or dividend growth, there's something here for every investor's needs. Remember, dividend investing is all about the long game, and these ETFs are designed to help you build wealth and passive income over time. Before we go though, If you found value in today's video, don't forget to subscribe to the Dividend Hero for more insights, tips, and strategies to help you grow your portfolio.